Whilst a business might be profitable, this doesn't mean it will be able to survive. To achieve this, a business needs cash to be able to pay its debts. If a business could not pay its debts, it would become insolvent and couldn't continue to operate. The main reason for this problem is that profit is not the same as cash flow. Profits, those are from the statement of profit or loss, are calculated on the accruals basis. Most goods and services are sold on credit, so all the point of sale revenue is recognized but no cash is received.
LK7 Statement of Cash Flows requires companies to prepare statement of cash flows as part of their annual financial statements. The cash flow must be presented using standard headings. There are two methods of reconciling cash from operating activity. You should ensure that you understand the items that are included within each of the three sections of the statement of cash flows, together with the reconciliation of the net increase or decrease in cash equivalents for the year. Operating activities are the principal revenue producing activities of the business, further adjusted to deduct interest paid and tax paid in the year to arrive at net cash flow from operation. Here, students note that net cash flow from operating activities can be calculated using either the direct or indirect method. And investing activities are cash spent on non-current assets, proceeds of sale of non-current assets, and income from investments. And if you see, the financing activities include the proceeds of issue of shares and long-term borrowings made or repaid. Net increase or decrease in cash and cash equivalent is the overall increase or it might be decrease in cash and cash equivalents during the year. This can be calculated by comparing the level of cash and cash equivalents included in the statement of financial position at the start and the end of the accounting period. So for cash generated from operations, there are two methods of presenting cash flows from operations. You need to understand both methods of presentation and be able to apply either method in the examination if required. The direct method provides more detailed information and is based upon cash flow information extracted directly from the accounting records. There are two ways to calculate the gross figures. It means the gross cash flows necessary for the direct method can be derived. The first method is from the accounting records of the entity by totaling the cash receipts and payments directly. It means the debit side and credit side of the cash accounts. And the second method is from the opening and closing statements of financial position and statement of profit or loss for the year by constructing summary control accounts. It means in the profit and loss and financial position accounts. Let's look at an example of a direct method question. Here, in this question, we have a balance sheet and P&L and some additional information. So, how can we calculate the operating activities figures? So, the first one, we know cash received from customers. So, for this figure, we need to create a receivables control account because cash receipts from customers figure in the credit side of the receivables control account. Let's do that. Opening balance and closing balance can be taken from the balance sheet. Sales revenue, here we assume all sales are credit sales, can be taken from the profit or loss statement. As we know, cash receipts from customers should be in the credit side of the account. Easily can find the sales received from customers. Then cash payments to suppliers. Same rule for opening and closing balances. Here in the question we have two types of purchases. The first one is cost of sales purchases. Those are items of non-inventory items. Then the second one is admin side purchases. As purchases increase the payables control account, both will be in credit side of the ledger. So easily can find the cash paid to suppliers balance that should be in debit side of the payables control account. Here the lesson is information relating to non-current assets purchase is not included in the payables control account in order to calculate cash paid to suppliers of operating costs. So let's find out the wages paid to employees. Same rule for the opening balances. Then wages from the cost of sales is 145,000 and administration is 100,000. So those two balances should be payable within this year. So it will be in credit side of the account. So the net wages paid should be in debit side since it will reduce the liability.